Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
Good morning, everybody. It's James Evenden from the property team. And how exciting to be in front of you this morning for Wealth Coffee Chats. I do have my coffee, and maybe just put in the chat there while we get to know each other a little, maybe where you're from, where you're located, what city you're in. I'm in the beautiful Gold Coast. Here's one of my favorite coffee mugs, and this is an Adele Bashir one. It says, beautiful dreamer. The window to your soul knows the doorway to your destiny. I think that means trust yourself. So if you've got your favorite coffee cup, I like that. You can see over my shoulder there, there is a sleeping dog on a couch. This is how we roll. Good morning to you all. Hopefully you've got a little furry friend somewhere at your feet and a nice coffee cup in your hand too. So this morning I want to talk about the markets, right? I'm in the property team at Positive, and this is what we do. I've particularly gone for quite an interesting sounding topic, outperforming the market. And I did search a little bit of this on chat, and I had a look, and I'm like, what do people want to know? And well, I want to outperform the market. I asked my kids what would be most interesting there. And they're like, Dad, well, how do you make money? And I'm like, great. So listen, I'm a big bullish fan of the Aussie resi property sector. I'm going to go into a couple of points on that. But macro versus micro, which are better, which makes sense? What do we focus on? This is sort of cool. So I'm going to just share some slides with you today. It's definitely not death by PowerPoint. Let's keep it fun. Let's keep our coffee and our furry friends at hand. Let's have some fun with this, right? So macro forces. Listen, the first slide you can see there is one that I get from Sam, and I get all of my good stuff from Sam. I love him. I've been around listening to Sam for a long, long time. If you haven't yet, there's his book. That sits on my desk all day long, and I flick and have a little read. But this is 4X Growth Plan. Many of you heard me talk about this in one-on-ones, but if you haven't tuned into this, watch this episode. So this really talks about the market delivering most of your growth, right? Market will deliver most of your growth. When we've got sort of deal money, suburb money, and what we call over market growth, or how can our property outperform. So I want to use this as a little bit of our framework to give some context around how we might be approaching real estate and the various stuff in the markets. So the first one, macro forces. It says here, pi equals safety, equals a high level of certainty. I like using that word certainty because I'm a little older, I'm in my 50s, and I'm looking for a fair amount of certainty around my investments. I've got my sort of riskier sort of investment buckets, but Aussie real estate is so strong. There's such a high level of certainty around it. It's why the banks will lend you 90% of the value, right? You can get 90%. The banks believe in this so much. The governments do, the institutions do. This is Aussie real estate. And if we focus on market growth and understand the concept of pie, then we're going to be in great shape. The very first one for pie that I'll always talk about is population. Population there, you can see on the screen, Australia is due to have 42 million people by 2051. Now, rough math, that's about 50% more Aussies in about 25 years. So it's taken us a long time, right, since the first fleet arrived. Let's use that as our marker date. 1788, goodness, my math is not good this morning. So about 240 years to get to 25 million. And it's 240 years. And we're going to get 25 years, we're going to get half of that again. So we're on a pretty big growth, I can't say that word. We're on a big growth curve with population, right? So this is going to underpin. And this is why the banks are lending 90%. This is why foreign investors want in on Australia. It's a very, very wealthy country. And Aussie resi real estate is incredibly safe, all right? So this is the safety factor that I love. It's some other things we could look at there with pie, population, okay? We're going to have, oh goodness, I had some more slides there. I don't know where they went. Okay. Well, doesn't matter. I had an infrastructure slide. Doesn't matter. It shows some big infrastructure numbers, right? What's going on in our states and from the federal government budget and all of these sort of things. And then we're going to look at economics and in particularly interest rates and these sort of things. Jobs, not so much interest rates for the big macro forces. They will drive the overall market. But when we talk big cycle, population, infrastructure, and economics, it's really where are people going to live? What are they going to do? How are they going to earn their money? What's the government going to spend? That underpins the whole game, right? This is the certainty factor that I love to know. So this is cool. Oh, hang on. I've just clapped and it's moved my slides. I won't try that again. I'm not that much of a professional. So micrometrics, this is what it's a little bit more about today. So micrometrics, what are we talking about? Well, I've sort of created a bit of a gap here, above the line, below the line. And Forex growth plan, I mentioned that we had suburb growth, I had deal growth, and then we sort of had localized or suburb growth, even over market growth. So let's have a look at a few of these, all right? So micrometrics, rental yield, obvious one, right? That's the annual rent divided by the market value or purchase price, whatever you want to use, and that's going to give you a gross yield, right? We're going to study that for sure. Days on market, this is going to give us an indication where the cycle is at, and we've got some cool stuff we can look at there. Right? Where is that market cycle at for that market, right? You can start very, very broad. We wouldn't look at it probably. We probably wouldn't look at an Australian figure for this, but we might look at a state figure or a city figure or a regional area figure. So we start to break things down at this point, days on market. Market inquiries and days on market, one of the easiest ways to look at it is auction clearance rates, all right? We would look at potentially market inquiries. How many inquiries are certain markets getting, not just properties, but certain markets getting for the number of listings they've got? And that's a really good indicator, understanding where the cycle's at. We would look at rental gap. Now, we've talked rental yield. That's what the property is going to get us. But what if that is under rented? All right. This all helps us try to determine where is the property on the cycle and can we get deal growth? Rental gap is one we look at, and we did some great numbers on this. It was really apparent for us in a location called Point Cook. And some of you sort of watching or tuning in would be aware of where Point Cook is. It's a suburb in Melbourne. But when we started looking at the yields were pretty low. And we looked at that and said, okay, well, are they low because people can't afford to pay more or they don't have to pay more? And they didn't have to pay more, right? Vacancy rates were high in Melbourne. Vacancy rates are high in Point Cook. So it was a renter's market. Now that's swung and that's changed. And we looked at that and we looked at household incomes. And so we were able to see disposable income. And then we looked at what the percentage was currently being spent on rent, what the city average was, what the national average was, what perhaps Sydney was. I love comparing Sydney to Melbourne, right? Both big cities, different parts in their cycle though. And we could see that what people were paying in Point Cook was well below what they could. They just didn't have to because there was vacancy, right? So we looked at that rental gap. And so you might look at an overriding micrometric like that and go, well, the yield's too low. No, not for me, not yields. That's okay. And we want to understand that. But what's a better question we can ask ourselves? Well, what does that mean? Where is the effect of that? Where is that showing up? What does that really mean? And I'd suggest rather than just yield, you look at rental gap. What can people afford to pay here? And if they max out and cost of living's gotten high, we know this, then we might see that the rental yield's as high as it can be. But if we see rental gap, we'll point that out to you guys. But that's our job in this mix, is to dig into these layers of metrics, micro metrics, to say, where is the opportunity? And where is that at on the cycle? Right? The rental gap in Queensland over the last few years has not been there. There hasn't been a rental gap. Rental yields have been so high. Okay. And so we're able to see where that put that property or that location, that market on the cycle, and what that could do. And then we'd look at another thing. Oh, I've got this funny little pop-up box. I don't see if it says drag to move. That's not fair. There we go. It's gone. Called discounting. Now, discounting provides deal growth. Again, this is where we're going to help us find out where a property is on the cycle, and then can we get deal growth from that. Now, if I went back to Sam's Forex slide, and I won't go backwards, but if I did, that deal growth column talks maybe about getting 10% in a deal. 10%, right? We want to be focused on the big market. Macro forces provide the certainty. Micro forces allow us to outperform. And that's sort of what we're here to talk about today, isn't it? Outperforming the market. So where is the market at? How can I outperform it? Micro metrics for that. Discounting. Now through Melbourne, so those of you who've been keeping an eye on our stuff and our property reports would have seen, sorry, I just saw the chat there and got distracted. Emily says, clap my hands and I'm going to try it once here. I said today I want to have some fun. If I clap the slides, oh my God, it did work. Well, I'm quite amazed by that. And now I'm really freaked out. So I'm not going to do that again, Emily. It's gone back. Oh my goodness, maybe you're doing it for me. I think that you've got a mouse and Miller and you're helping me out there. That's really, really fun. All right, now I'm blushing because I'm going to keep moving on with my prezzo, right? So discounting, Melbourne, discounts there. We've seen 5%, right? 10%, 20%. My goodness, right? Some massive discounts coming through. They might be rebates. That Point Cook deal I've talked about, that had 15K on the table. Developer wanted their stuff gone, 15K. State government's putting incentives on the table. Buy off the plan, pay reduced stamp duties. We've got vendors giving us discounts to take that stock off their hands. 50K, right? The properties we've got in Preston at the moment, 150K discount below valuation, below settled price. All right, so we've had some massive discounts in there and some massive wins for clients because of that, because we understood that was going to be deal growth. And I'll always say, we're not out in, I'll use Broken Hill, and all apologies to anyone in Broken Hill and people who've made money in Broken Hill. And you can. I'm just saying I'm looking for the certainty. So I'm not going to Broken Hill for the discount and the deal growth. I'm going to Melbourne because I understand the cycle and the macro forces are there to make sure I'm going to hit my home run because I'm in the Melbourne market or the Brisbane or the Sydney, whichever macro forces we decide really we want to go after and where that's making most sense to us, what opportunity, where is the deal and the cycle. So we're going to look at discounting as micrometrics. Then we're going to have some suburb or some localized factors. This is deal growth, get 10%, and this is how can our property outperform in the long run. So this is outperforming the market, the broader market. Now I'm going to get discount and a deal and understand this. And this is over time. I'm walking into money here, deal growth. This is over time. How do I outperform? And we're going to look at a lot of stuff here. I've had to condense these. This is not 3 items. There's about 30, but there's 3 bullet points. We'll be looking at things like owner-occupier to investor ratio. That's a simple ratio. We're going to put that and quote that and use that in all our property reports. So we're going to understand that, right? Ultimately, homeowners are going to pay the most money for properties. If we can buy properties as investors that in the long term will appeal to owner-occupiers, now we're going to make our money, right? Get properties that can yield well, help us hold them, all right? And long term, we want to sell to the owner-occupier market because they're going to pay the best prices, right? Hard prices, emotional prices. So we want to understand that now. And ideally, we'd be up in the 60 to 70% mark, right? A bit owner-occupier to investor ratio. Some estates we've got are even higher. When the cycle turns and demand really kicks in, then we might see suburbs and locations go to 80, 90% owner-occupier, right? And we're going to quote those figures in our property reports. We'll look at digital impact, and this is massive. This is all of the stuff, and there's the walk score. Oh goodness, I've gone blank. I should have written this down on the website that we have a look at there. And microverbs, I think, is maybe it. Tabitha uses it a lot, which is awesome. We look at that digital impact, and then we look at demographics, and that again is a whole talk. That's not even a talk. That's not even a subject. That's like a uni degree. Uni. I'm saying that, if you're going to uni rather than studying it at home, but that's a massive, massive study. And we want to understand demographics, because they're going to tell us household composition, who's there, who's going to be there, how much money they're making, how many nice neighbours could they attract in, will those nice neighbours have more money, better education, more money again. All right, and this is the cycle we just want to have a look at. So with that said, I'll drill into a few. I think I've still got you. I'm loving the chat there. If you are there, you can put a little bit in the chat. That's all right. Rosie, thank you. Love it. Courts. Emily, thank you so much for being online this morning. So let's have a little look here. This is one of our micrometrics, auction clearance rates. And we can see there that, where have we gone? Auction clearance rates at the highest level in years. This is effectively the same metric as days on market. So days on market is shrinking, auction clearance rates increasing, improving sentiment. That means people are saying, yeah, I want to buy, and home price rises. So again, this is a metric, right? Now, if anything, this should get us off our bum and into the investment market saying, I don't want the next cycle to get away from me. Now, if it does, this has happened to me, and it happened to you as an investor, you don't get in, and it doesn't matter. We just go looking for more opportunity, right? This is going to drive our long-term asset growth, right? We're going to see short-term gains from it too, though, right? So we want to look at auction clearance rates, right? What's the next slide we've got? Right, the market is turning in lagging cities. Okay, so this is giving us an indication of where the cycle might be at for specific locations. Market turning in lagging cities as buyer demand builds. I got this off realestate.com this morning. All right, where is demand building? Darwin, Hobart, Melbourne. Right, Darwin, Hobart, Melbourne. Okay, so we've been saying Melbourne for a long time, and this macro piece of pie would say to me, I like Melbourne probably more than Darwin. Been to Hobart, I haven't been to Hobart, been to Darwin, fun city, a lot of fun, right? Went out late, it was a very fun night, but these are smaller cities, right? These won't match Melbourne with pie ever. So I'm looking for the certainty. So I'm into Melbourne, demand is building. So I'm starting to understand auction clearance rates, reading the headlines, starting to understand these micro forces, make good buying decisions, right? Key inquiries, right? This is a great metric that we can use. Oh, where'd I go? And we can have a look here. Have a look at this. This would give us a little bit of an indication of where the market's at. I'm going to say this. I'm going to have a little sip of my cup of tea. All right. You don't want to read so much into this that you don't take action. And not one number can't skew the whole deck, right? But let's have a look. So it's Sydney minus 3%. So that key inquiries per listing. Okay. Inquiries just down a little bit in Sydney. Okay. Well, it's interesting because the auction clearance rates were up. So maybe there's a few less people looking, but there might be more results coming. But look at this one. When you see a number like 22%, that's an indicator that you want to take notice of, right? Melbourne has got 22% increased viewer listings for properties. So we know that there's buyer demand. Now, I didn't go into the big metric, which is supply and demand, but if we've got increased demand, we know the market can move, right? Brisbane's eased off. Perth eased off a fair bit. Adelaide's eased off, Hobart and Darwin kicking in. Darwin, huge, right? And this doesn't mean that's a big number. That's worth taking notice of. Now, Hobart and Darwin are a smaller city, so they don't need big increases to actually make the percentages look big. I call that the data set. The bigger the data set, the numbers. Melbourne, big data set. Sydney, big data set. Hobart and Darwin, smaller. All right, so we look at the big ones. I'm looking at that and going, I love the look of Melbourne. All right. Right, what do we got next? It's a little bit of a lucky dip. Okay, so then let's put a few of those into context with what we've got and we've seen. And this is actual numbers that we've used in a property report, PR 6604, South Kingsville Place. I love this place. I went there, get a great vibe, get a great feel. What's it look like? All right. What do these metrics really show? We can see the median price, days on market, 26, pretty low. Days on market, 26. Discount rate, 5.7. Okay, so we've got properties aren't staying on the market too long. Well, maybe there's bugger all getting put on the market. Well, that would be interesting. And then we've got discount rate at 5.7. That's probably pretty good, indicating there's still room on that cycle. 58 to 42, yeah, not bad. I said 60 to 70, real sweet spot. Hey, 2% off. I'm going with 60% there. Let's take that. Average income per household. Knowing that figure could allow us to look at rental, yield, gap, and all the rest, right? So this is some key metrics that we've used in this property report. Value proposition. This is for this same property, right? Below quality discount value, below intrinsic value, below investment value, below built-in carryback value. That's sort of more of an accounting term. Group discount, below future supply value, below next cost push effect value, discount below next zone land release, and discount below peak of cycle. Now, I would suggest you don't have to be the, you can rely on us. This is a lot of data. This is a lot of metrics to really wrap your head around. And don't worry, this is a lot. You don't have to go do this. We do this for you in our property reports. So this is a lot. This is a lot of micro metrics that I'm getting tick, 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 tick on, right? I love this stuff. All right, 1 or 2 more slides here, guys. Hang in with me, and then I'll let you get about your morning. This is the digital impact score that I talked about a little earlier. Affluence, family, convenience, community, and lifestyle. Big, big ticks there. Certainly the affluence I love, because affluence will bring in a bit more family, a bit more community. The Westgate bypass and all the rest is going to make these look really, really sexy. So I love these metrics. And then the final one, I'm not even sure what's on my final slide. There we go. Okay, so what could that all mean? And here's some projections then, if all of that plays out for South Kingsville. And we can see there that we've got some big growth, 8%, right? Year 1. Next year, 7.3. And the year after, I've got to look at my other screen there because the numbers are so small for me. I'm going to call that 8, 7, and 8% growth is what's projected, not by us. This is some of the market analysts that are crunching these numbers. They're putting all of those macro forces in. They're putting all the micro forces in, micro metrics, and they're coming down and crunching it down to an actual number, which I love. 8% growth. Who doesn't love that? Discount on top, deal growth, market growth, macro versus micro. I'm not sure where we landed there, guys. Thank you, though, for sort of listening in and tuning in. In summary, macro forces give us our certainty, give us the strength in the market. Our assets are going to increase in value. Aussie real estate, Aussie resi, that's it. Go, go, go. And that's our macro forces. Our micro metrics are going to help us understand where and how and what, and specifically all these bits that allow us to get in and make a really good property decision to outperform the market. So hopefully I've done that today. Showed us how can we outperform the market by using micrometrics. I'm not sure. Give me a tick. Give me a little bit of love in the chat there if you can see that. Give me a heart or a tick or a yes, we did it. I'm going to wrap it up there, guys, and say thank you so much. Thank you for tuning in on your Monday. Wealth Coffee Chats, we are here every day. I think that Emily is going to hit the play button. Maybe I could clap it. And
thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.